Hi, good evening, everyone. Please, can you tell me if you can hear me and what screen do you see? Do you see the white screen where it says Workshop 23 with the EQ5 logo? Very good. Very, very good. Perfect. Thank you, everyone. Well, the charts are coming up, John. The charts will come up pretty soon. I'm just going to disconnect the screen just for a second. Just 1 second, so don't worry. I'm here. I'm sure you can hear me and you can see the screen now. Just a minute. Okay, my connection will just reset really quick. I'm just going to connect to a more powerful router next to me. So just bear with me just 1 second. Okay, I'm back. Let's just make sure that you are watching the correct screen. Okay. So, how are you all tonight? Or morning or afternoon, wherever you are in the world. Can everyone hear me? Good. Okay, good. So, how did Monday start for everyone here? Is it good, bad, same as always? Okay, okay. I hope you guys can hear me well. I asked how is everyone, but nobody's replying, so I don't know if you can hear me. Okay, good. Okay, let me try. I'm very well, Kato. Thank you for asking. I'm going to try and fix the sound by removing the microphone. Okay, my mic is out, so I'm using a different mic now. Can you tell me if you can hear me a bit better now? Much better. Good. Everyone else the same? Great. Good, 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 good. Very good. Okay, so I'm going to use this from now on. Firstly, I'd like to welcome you to this workshop, which I'm calling Workshop 23, and I'm calling it for the reason of the 23 rules, the trading rules that I've set out in the last 2 courses. I believe all of you should have received. I believe that all of you should have received the information, but if you haven't, I'm going to put it into this box over here, and you all will be able to receive this through the session. Before we begin with anything, I'm going to stick in the risk management calculator. So I think you'll be able to pick it up from within the webinar application. Can you see it? It's called EQ5 Risk Management Calculator Revised. Good, good. Okay, so I'm just gonna stick this on the screen over there where you guys are looking. Just a sec. Okay, can you see it on your screen right now? Okay, good. So I'm going to explain to you. Let's say, for the sake of me explaining this, to keep it simple, most of you have $250 in your account. So you can only, here's the guide, you can only fill in the green parts. Don't touch the red ones, just green. Now, it's quite simple. So let's say we have $250 and we want to risk only 2% per trade. Obviously, you can't open 2.5 lots, so you have to go a little lower. So if you open a 0.05 lot position on euro dollar, let's say, your estimated stop loss should be at 10 pips. The reason it says estimated is because each currency has a different value in pips. Euro dollar is a perfect example here. You would put 10 pips. If you want to increase your stop loss, you can do this and you'll have 50 pips. At 0.02, you'll have a little less than that, so that's 25, and at 0.5, it's 10. So if you want to be trading 0.5s, you'll have to increase your risk, let's say, to about 4%. And this will give you a logical stop loss. You don't want your stop losses to be too tight unless, and I'm going to explain this, unless your take profit is small. And I'm just going to explain this right now before we go into it. If your take profit is 5 pips, okay, so basically if you're scalping, if your take profit is 5 pips, because I noticed, I review the trades every weekend. I just quickly go over all the trading history of all the retail clients. And I realize many people take profits very, very quickly. This is good, but it can also be bad. And I'm going to explain to you why it could be bad. Because you're taking extremely small profits. Okay, the profits are very, very small. Unless you're trading with hundreds of thousands of dollars, then you shouldn't be taking such small profits and such small accounts. Because you will grow very slowly. But the problem is, I saw people raise their account by 50, 60% and then lose everything on again. Like I said, just a few trades, 1, 2, 3 trades. The reason they lose it is because they take a profit of 5 pips, but they take a loss of 20 pips. It does not make mathematical sense or any investment kind of logic, and it contradicts every kind of risk management that we would do, because in the long run, that is a losing strategy. So if you're going to have a 5 pip take profit, you need to be ready to close a trade with 3 pips negative. You know, your take profit can't be, shouldn't be 5 times, 10 times smaller than your stop loss. And I'm telling you, if you're doing this, stop, because it can really, and it will really damage your investment portfolio. So I explained how this works. There is a little guide here, and if you have any questions about this, I can explain it to you again. A recommended risk, what I would recommend you is not to go over 5%. Okay, so on $250, that's about $13 per trade. Okay, I'm going to explain to you how to put in the trailing stop, and I will show it to you here. So I'll just go on a demo account. I opened some trades to demonstrate to you something, but let me just pop into this demo account quickly. Okay, I need to create a new demo account. Okay, so you were asking how do we put a trailing stop. A trailing stop is added like this. Just a sec. So we bought gold. We see our trade here. You see this little shield over here? Once you press this little shield, this will come up. Advanced stop loss is a trailing stop. So trailing stop, recommended levels are this should be above 10 and this should be above 5. Your position will get stopped out pretty quick. I would even recommend something like this. So once you do this, you do not need a take profit. Forget about the take profit. All you need is the first thing you should always add is a stop loss. Okay? So I'm gonna get into this pretty soon, but I just want to show you the calculator one more time. Okay, so the calculator is essential for you to trade with. I recommend check checking this every time you increase your portfolio size. If you're trading with $250, you don't have to do it with every single trade, but you should at least check. You should at least check this. You see, if you go on an asset, if you are only trading, because I saw you only trade these pairs, USD JPY, GBP USD, and Euro USD. Press to view the information. Once you press to view the information, you'll receive this, and it will tell you quite a bit of information about this asset. So you'll at least understand if the lot sizes are basically what are these lot sizes, what are they used for. You see the trailing stop just closed this position in a profit because it retraced. We shouldn't do it on gold, so I'll just do it in Euro JPY. So here we go. You can do it here as well by pressing this little shield, trailing stop. We're done. Stop loss, and we're done. That's it. You don't need a take profit. Just trailing stop. Okay, so do you all understand how to use the calculator, or should I explain a little bit more? Good. Yes, John is asking, does the stop loss still trade even if I move it manually? Yes, it will trail. As soon as this position comes into a profit of, I think I put it at 15 pips, so as soon as it comes just about here, this will move into profit. Now, you have to know that this only works if your platform is connected. Okay? It will only work if your platform is connected. So if you're not logged in, this will not work. As soon as you log back in, it will start working again. So keep that in mind before you start using a trailing stop. Before you put a trailing stop, forget about it, okay? Don't put a trailing stop because it will need some time to go into profit before it starts working. Put your stop loss right away. Peter, do you mean for the risk management? Would I have a daily stop limit for my trading on a daily basis? Okay, what I do is I'm going to explain to you a few more things today about when to trade and when not to trade. But this I use per trade. You would actually have a maximum. What I recommend everyone doing is creating a little trading plan. This shouldn't be very complicated. It should have your investment portfolio inside. So basically, what is your capital? The next thing it would have is your goals, which would consist of daily, weekly, monthly, quarterly, and of course yearly. So you need to make a projection, just like the market moves. And watch my course here. Market moves upwards. You need to have a checkpoint. These things need to be combined into something. Each one can be a bit higher than the other one, but I'm going to have a session for you. Actually, this is what I recorded on the weekend. I just need to upload it properly. So this is what it's about. It's about creating goals and basically a trading plan. The third thing you would have is your risks. So risks, which would consist of, obviously, and I fully recommend this, daily. Sometimes it's just not our day. Daily risks and per trade risks, which will be combined to a total risk. What I mean by total risk is, let's say you have an investment of $1,000 and you say to yourself, my total risk of this portfolio is 25%, which is $250. So if you lose $250, you take your $750 out until you don't become a better trader. Because I said this the other day, it's when you're down 20, 30, or 40%. That is when you're in trouble. That means something is not going right. You're making too many mistakes, and I'm going to speak about that pretty soon. But if you are making too many mistakes, stop. You need to go back to basics. I'm pretty sure many of you have studied a very long time to go into your professions. Some of you might be doctors, architects, there's a million things that you need to study a long time for. And if you look at anybody that's successful at their profession, and I'm ranging this from professional athletes to doctors to politicians to anybody else, they've all studied a lot before they did something. Okay? Playing around with your money is the same thing like a doctor going into surgery, because you're actually going to lose. You have a very big chance of losing something, and that's your hard-earned money in this case scenario, or sanity, relationships, many other things. I've heard of people getting divorced, losing their houses, their kids, and many other things because they gambled everything away in the financial markets. They never had a checkpoint and said to themselves, if I go down 30%, I need to stop and think about what I'm doing. Because you don't go to work and say to yourself, you don't just randomly go to work. I don't know what you guys do, but you'll never just pop in a car, for example, and drive on the other side of the road just because there's no cars. And this is what many people do in this industry. They trade like they're never going to lose. Like there's no chance of them losing. They only think about the profits. And I'm going to start speaking about this pretty soon. Many people think just about profits and not about losses. I learned after losing a lot of money, a lot of time spent, because I could have used that time sitting in front of a screen for hours, losing constantly, and taking massive risks and not even thinking about the consequences. I could have spent that time reading books, practicing on demo accounts, drawing plans, thinking more. Because the difference between a successful trader, a person who actually does this for a living, consistently makes money and has zero to no risks, actually thinks. The person that's sitting there and popping money into their broker every month with their credit card, or borrowing money, or getting loans, or selling their house so they can invest, is a person that is taking big risks and is not thinking too much. And to me, that is very, very, very dangerous. And I'm sure to you it is as well while we're speaking here. But our mind is a very powerful and yet dangerous thing. It can drag you down. So my advice is, before you start going crazy, start learning a little bit more. Start thinking deliberately. If you have 1 hour to trade a day, make that hour worth it. Study, gain knowledge, understand things. You have to be ready for opportunities. Knowledge, and this is a fact, knowledge is more important than capital. To succeed in any kind of business, you need to be prepared. And in preparing for a speculative or investment business, you must pretty much look up the greatest advances in the markets. You need to know what's going on with the market. You can't become a banker without having any experience. You can't go into an operation table without being a doctor. To become a doctor, you need to study, practice, and it's not easy. And this is not easy. And I think it's time for me to begin this, so I don't take up much of your time. Okay, so Workshop 23 is basically about those rules that I sent you. And if any of you didn't receive those rules, I'm going to be putting them inside our conversation right now, just in case you didn't receive them. Let me just find this very quickly on my screen. So here we go. If somebody didn't receive this, I've just dragged and dropped it in here. These are the 23 rules. And yes, let's get the show going. If you have any questions, just don't hesitate to interrupt me. Last time we stopped at rules. Number one was the amount of capital you use. I'm not going to go over these. I'm just going to go very quickly over them. You already must have the PDFs, and you could have watched the sessions from the other time. Always use a stop loss. I feel I cannot repeat it enough times. The value of using a stop loss. Look, safety is the only value. So a stop loss is the only value of safety to protect you, the investor, the trader. A stop loss is literally the essence of risk management. If you find yourself not using a stop loss, you're going to remember these words. You're going to lose. You need to use a stop loss. You need to know when you can, I can't stop talking about this. I know it's basic. It's really basic, but you'll be surprised how many people don't actually use a stop loss. An investor or trader, will place a stop loss, and 1 time out of 10, the stop loss will get caught at exactly the top or the bottom. What I mean by this is I'm going to pull out the chart again very quick. I'm going to pull out the chart very quickly. Do you see my chart, by the way? Right now, do you see the chart? Okay, we got an answer. Yes, okay, good. So, this is what I mean. Let's say, look at my trade here, okay? And I'm going to move my stop. Well, I'm going to leave it here because of this area over here. I'm just going to mark this for you very quickly. This over here. You see? This is a previous high. We've already broken this previous high. And by the way, there are excellent chances that the price will go here. Euro GBP. There are very good chances it will go here. Euro dollar is continuing the up move of what I was telling you. And gold has already reached that point. And if you all remember who was here, this is the point I told you, and I marked it at that time, where I told you it would go up, and it's gone 7,000 pips. Well, it's much more than that, but we would have probably gotten out over here because it's creating a double top. There is still 2 hours left for this daily chart, but if you go on the 4-hour chart, it looks like there could be a small resistance coming up. It looks like a sideways double top. And just to quickly stay on this for a second, double tops are extremely, extremely powerful. And I'm going to just demonstrate this to you quickly. This is a demo, and I'm just going to open. Don't follow me on this. I'm just going to show you how powerful they can be. Because at least 7 out of 10 times, they work. They work, and they work really, really well. Okay, so now what I mean by what I meant by stops. I'm just going to show you where is the trade. Here we go. So I'm doing it because of this. I just put it below this. Many people, and many times this will happen to you in stop losses. Your trade, you will open it, it will be great, and then price will come back down, come literally till this level. You will feel like somebody's against you. It will close your trade and go in that direction, and you'll be extremely pissed off. And excuse my language, but you'll be, it happened to me so many times that I thought like, what the hell is going on here? Who's messing around with me? But it's actually nobody's messing around with us. I'm telling you right now, at least 1 out of 10 times you will be caught at the exact level. And many traders after this will always remember that, and many of them say this. I heard many people tell me this, and I'm going to quote here. If I place a stop loss, the price will just go down and hit it, or vice versa, go up and hit it. And when it hits it, it will just go in my desired direction. So what's the point of using a stop loss? My correctness is 80% of the time. But when I show you in another session, I'm going to show you statistics of real traders on real accounts on our platform. You will be pleasantly surprised to see what I'm talking about work. You will see that I will show you specific traders who have sometimes even a 92, 93% win ratio. And then you look at their account and it's minus 70, 80,000. How could that be? If somebody's winning 92% of their trades, it's because they do not use a stop loss, because they would open a trade for a buy like I did here, and price will go down and they'll just do this, just remove this and say, it's okay, it's going to come back up. It's the market. It has to go up and down, up and down. But imagine you did that here. Imagine you did that here, or here, or here, or even here. You would be down so much. Imagine you did it here. You went buy. Sure, right now, you would have been in an excellent profit, 250 pips. The problem is you would have been down 400 and something. And that would give you a margin call, and we're going to talk about margin calls pretty soon. But yeah, let's continue with our presentation. Stop losses, essential. I'm just going to try and remind you guys of these rules because they are very important, and if you do not follow them, it could be dangerous for you. These rules are used by professionals, and some of the most successful traders in the world learn these rules from one man, and that man I'm going to educate you on another time. So never let a profit turn into a loss. I mean, that's a given. So when we're trading, and let's say this trade over here turns into a small profit, we can't do it yet because we're just a couple of points in. But once we come into a profit, let's say of 10 pips, it would be wise to just lock in at least something. It's always better to win than lose, and I'm pretty sure you all agree with me on this. So yeah, let's continue. So don't buck a trend. That means do not trade against the trend. When in doubt, get out. Trade only in active markets. Equal distribution of risk is essential. What I mean by this is trade in different markets, something that is not connected to other ones. Do not use limit orders because if you're not a professional trader and you're not always available to open your platform, don't use pending orders. Don't close your trades without a good reason, but don't open them without a good reason either. Don't just open them because some indicator is telling you to open it. Get the facts. Accumulate a surplus. This is important. Once you have a real account, once you make money, transfer some of that money into another account. This is your security account in case of whatever. I mean, it would be always good to at least have a second account. You can use it for whatever you like. Never trade just to be in the market. This is shamefully, it happens to many people. I mean, when was the last time you opened the platform and stood there for 2 hours and not open a trade? It's very hard to do. You know, you just want to be in the market. You see things happening and you want to open trades, and that's basically overtrading. And we're going to talk about overtrading soon. Never add on to a losing trade. What I mean by never adding on to a losing trade is this. Gold is losing, okay? The trade that we open on gold is losing. The last thing we want to do is when price goes a bit more up here is open another sell, okay? I'm going to teach you something different from this. If price comes here, don't sell, don't buy. If you buy, you're hedged. If you sell, you're adding on. I'm going to teach you something else called pyramiding. If you know what that means, then that's great. If you don't, I'll teach you anyway. Never get out of the market just because you lost patience. Avoid taking small profits and big losses. This is what I began this presentation with. Never cancel a stop loss after you placed it. Never, ever, ever, ever do that. Avoid getting in and out of the market often. What I mean by this is don't overtrade. Number 18 is very important. Be willing to sell short as you are to buy long. What I mean by this is don't look at the market and say to yourself, it must go down, so you go sell and then it just flies up. Not every double top works. I think this one will, but I mean, that's me thinking. That's not me having facts. So this here has normally a 7 out of 10, or in different pairs has even an 8 out of 10. That means 8 trades that you're going to go sell will actually be really powerful. And I'm going to show you this one on USD CAD. And this is the one that we gave out this morning. If you received an email, price was I think somewhere here, and that's over 100 pips down. There is another possibility to short it here, but I would advise waiting just a little bit more because it might pop out just like here. But that's not what I wanted to show you. This is what I wanted to show you. Here's a classic and clear double top. There's one, and there's another one. Price moves rapidly upwards, relaxed, and then rapidly downwards to exactly the same level where it came from. That could have made you a lot of money. That is 1,000 pips. On this pair, if you were to sell it with 0.1, it would have been $600 profit, more or less. So yeah, double tops are really powerful. They're really good, and I love looking for these kind of setups and channels as well. So as you can see on Euro GBP, we have something similar to a double top, and here it is. Well, it actually is a double top, but I've still taken the trade up because I believe that it will actually break this level. But don't do that because this looks like a really strong double top. Because if this starts going down, it's going to be going down for a very long time. And if we go on the daily chart, if we still have a double top here on a daily chart, and we do, this is this is really, really, really strong. It might break it. It might be a fake out. It might go up and then back down. But let's continue with this, what I'm talking about, and then we'll come back to this. Never buy because the price of an asset is low, or sell because the price of an asset is too high. So I can use that in a live example. Okay, we do have a double top here, but don't just sell because you see this and you think that the price must go down because I said it's 7 out of 10 or 8 out of 10. You know, so get more facts together, wait for the right moment, but don't wait too long. Action is the essence of life, and action is what makes you money in this industry. This looks like a very strong bullish candle, so there's still 2 hours left for the daily chart to finish. Once this finishes, we can see where price could go. But we're in an uptrend, so we can see many more days in green. We saw 4 candles so far, with one tiny red one, and then much more heading upwards. Okay, so be careful of opening trades at the wrong time. This is what I was just talking about. Never hedge. Forget about hedging. Don't do it now. Never change your position in the market without a good reason. Avoid increasing your trading after a long period of success or a period of profitable trades. It's better to stop trading with 5 good trades and 5, 20, 30% of profits in a day than risking to lose it all. This is where goals come in, and this is how they help us. Like I said, we manage funds here. So we have 3 different investment types: conservative, medium, and aggressive. And I'm just going to give you rough figures here, but let's say on the conservative, when we make 5% in a day, we're very satisfied with this because 5% is a very good return in a day. We normally target about 1.5 in the conservative per day. But we're also happy with 0.5% per day. So we range from 0, depending on the market. Obviously, we do our analysis and then we determine what our goal will be. But it's not below 0.5% on a day, and it's not more than 5% on the aggressive. On the medium, we look for at least a 2% gain on a daily basis, but sometimes even try and achieve a 10% gain. On aggressive, well, we shoot for the limits there. We try and take as many trades as we can, but we do not risk more than a certain percentage, and it's never more than 35%. And this is the maximum we will allow somebody to risk. So let's go to this safety of capital. We spoke about this the other day. So your first thought must be how to protect your capital and make sure you're trading and investing as safe as possible. Our trading becomes safe by having stop losses, by having goals. Okay, we know what we're going for. We know our maximum daily risks. We know our maximum account risks. That means what I said before. If your account goes down, I don't know, 15%. If you go down 15%, that means what you're doing is no good. And even if you invest bigger and stronger, chances are that you're still going to lose. Because just like technical analysis, as it will be unless something changes. So unless something changes, you're going to lose again. And that's what you don't want, and that's what we don't want. So again, there's no way that I can repeat enough times that value of risk management is actually using stop losses. This is really the essence of risk management. You need to use stop losses. Now, what I was talking about before about traders with you remember what I said about this when trades reverse back and they hit your stop loss and it goes back up into that direction. And I'm going to continue talking about that. The average trader doesn't really use a stop loss because many people confirm this to them. Most of their brokers and account managers often tell them that your stop loss is always going to get hit. Don't use it. You don't need it. Now, they tell you this because it is in their favor for you to lose. Okay, so you'll lose bigger and quicker if your stop loss is either very wide or not there at all. Excuse me. So, probably over 60% of actual traders don't use stop losses. Out of those 60%, probably 50-something of them lose. So that's 9 out of 10 will eventually lose in 30 to 90 days. and this is a fact in the industry. So even if somebody is encouraging you not to use stop losses or keep them wide, or you're reading some article on Forex Factory or here or there, and some guy who's sitting on a screen who's probably not even better or more experienced than you, but he's just repeating what he heard from some other dude, he tells you don't use stop losses, use them wide, 2 to 1, 3 to 1, blah blah blah. Forget about those things. Forget about a lot of things that you know. You need to learn from scratch. And what I'm teaching you here is being used. I didn't read it on the internet. I didn't hear it from someone else. I didn't see it in a video. These things are actually from our experience of managing people's funds. Now, the problem is that many traders forget that 9 times out of 10, the stop loss was actually at the right level. What I mean by this is this, that 9 times out of 10, your stop loss is at the correct level. And that one time that it actually did hit your stop loss, it could have gone totally against you. Because imagine if you don't have a stop loss and what I showed happens, because you can be successful, right? So you can go sell here and be down 20 pips and then go plus 100. And this will happen frequently because the market is not that hard to predict if you really try. Just a second, we have a question. I'm sure you do. Thank you, Lisa. Thank you. I actually appreciate all of you being here as well. It's very good for me. I am very busy. I barely have time to respond to all the emails and manage everyone here, but everyone is important with us here, and I'm going to give 110% to you guys. So I'm going to continue. This has happened to me, and I'm speaking out of experience. I have a very high success ratio when I open trades, and I didn't use stop losses. And I would open trades, for example, here, I'll be in a minus. I didn't want to close it. Price would go up. I'd make money. I'd be happy. But then there was those times when I would actually go that one time out of 10, I would go sell over here, and I would be in a profit, but I wouldn't close it, and then bam, and boof, margin call, and bye-bye. And then I'm holding my head thinking, and excuse my language, but what the hell am I going to do? And I'm sure this has happened to many people. I've seen it happen to many people, and I hope none of you here, and I definitely believe that it won't happen to you with us here, because I really won't let you guys trade that way. So basically what I'm saying is, don't fail to use a stop loss. They are your best friends in the market, and you'll be surprised that they will actually help you. Even if it will hit, let's say you go buy over here and you miss out on this 200 pip move, forget about it. These are not wasted opportunities. There's going to be countless of opportunities on many different pairs. For example, look at USD JPY today. It moved by 146 pips from the open downwards. Look at that. And what is this? This is pretty much almost a side head and shoulders. So this is from before. Yeah, there's countless of opportunities. You can see these pairs. Look at GBP JPY moved 270 pips. AUD JPY 92 pips. CAD JPY 131 pips. So there's a lot of movement in the market and plenty of opportunities for everybody to make money. Okay, so stop losses, I already said this. Overtrading, we said this. Just a second. So I'm just going to go and leave this there, and I'm going to continue. The beginning of anything comes with changes in your mind. So basically, changing your mind. I once read a quote that followed, and this quote was said by a very successful trader a long time ago. He said that a wise man changes his mind. A fool never does. A wise man investigates and then decides, and a fool just decides. Now, in the financial markets, the man and woman who does not change his or her mind will soon really have no change to the mind. Now, once you have made up your mind to take a trade, and you have every reason for it, okay? Double top, support resistances, great stuff. Do not change your mind without a reason. Don't. Just a second, we have a question. Yes, it is. Yeah, it is. I kind of added on to it the last part, but the rest is about the financial markets. I like taking quotes and taking lessons from them and actually applying them to investing or whatever I'm doing. So the most important thing I refer to about not changing your mind is actually changing your stop loss orders or canceling stops when the market goes against you. So I'm just going to repeat that. When you've made up your mind to take a trade, don't change your mind without a reason. The most important thing that I'm talking about is actually stop losses. Don't cancel them, don't move them, don't mess around with them. Your risk management should tell you that this is how much you're risking. If you want to be a high risk taker, you'll have a wider stop. If you want to conservative, if you're more of a conservative person, trade conservatively. Find out who you are. Are you more of an aggressive type of person? If you are, okay, great. But don't just pop into it because you know, knowledge. I said that knowledge is more important than capital, and I prefer being smarter than somebody giving me $1 million for free. Because if I become smarter, just like the Chinese saying, and by the way, happy Chinese New Year to everyone. But just like the Chinese saying, what is it? Give a man a fish and you'll feed him a day, but teach a man to fish and you'll feed him for a life, and he'll feed himself for a lifetime. So you see, knowledge is actually much more important than anything else. You can have $1 in your bank account, which as long as you have some knowledge in you and common sense and a positive mental attitude, I'm pretty sure you can turn that dollar into something more valuable than just $1. So the first thing when you take a trade is to place a stop loss. This is the first thing that you do, and then everything else. Now, this is for your own protection, not for my protection or from anybody else's protection. This is your protection. This is your money we're talking about. Even if you found it on the street, it's yours. And I'm pretty sure you guys don't want to just lose it like this. So the first thing you do when you open a trade is put a stop loss. Because everything else you've done already before you've taken the trade. You've taken the time to analyze the markets. You know where the market is going. You need to know where the market is going. And I'm sorry to go back and forward here, but if I'm opening a trade for a buy, and I'm sure you guys saw a green line over here that I removed. We gave this buy signal a while ago, but we didn't give the sell. You need to understand where the market is going. This red line indicated that we believe that the market will go there. Sure, we missed out on this, but we got, I believe the line was here, so we got this. You know, so that's I guess that's the most important thing. You need to understand where the market is going. And if we look at this over here, my predictions for this was in the morning that price would head towards this bottom, but obviously we won't put our take profit here. We'll put it just above this here, because the last thing you want to do is see price come down here and then head back up. So always put it just a little higher than you normally wanted to, or where you believe the price will go. So always just a little bit higher, and that will help you obviously to make more money. Okay, so let me just go to Euro USD. You see, this level over here, the red one, the 75% what's written here, is actually pretty strong. So if this level gets broken, we'll see price go to 114.50, sorry. But I'll give my predictions on pairs later on. So I was speaking about changing your mind. We said that the first thing you do when you open a trade is put a stop loss. And again, that's for your own protection. Now, once you place the stop, you've acted wisely. Congratulate yourself. You've done and used good judgment. To change your mind from this decision is actually really foolish. And to cancel your stop is even worse. Once you have placed it, it is basically based on that good judgment and not on hope. Hope can lead to nothing but losses in the financial markets. So once you do something, you stick to it. If you made a decision to do something, you stick to it. So I see gold dropping here, so we could see gold drop tomorrow. It's been gaining pretty strong the last couple of days, but if there is more momentum, it's definitely going to break this line. But anyway, this looks like a good trade. So 9 out of 10 times when you place a stop loss, if you never cancel it, it will prove to be the best thing that ever happened to you. Okay? So 9 out of 10 times, you will be extremely happy that you placed that stop loss. One time, okay, it might, hit and fly up, but I will take those odds any day. Even 8 out of 10, and 5 out, even 1 out of 10, I'd still be happier with that than. Hi, can you hear me? I'm back. It's this boosters. Can you? Okay. Okay. Do you see the screen with the charts? Okay. Good. Good. Thank you, everyone. You're really helpful. Okay, so like I said, 9 out of 10 times putting a stop loss will prove to be the best thing you've done on that trade. And the man and woman who respects this rule, I promise you will be successful in the financial markets. And I repeat, if you cannot follow a rule, do not start to speculate, because you will only lose all of your money, probably your sanity, your patience, and your nerves, and you're going to be really, really, really upset. So if you can't follow a rule, don't speculate in the financial markets. You're just gonna end up bad. Now, one of the rules that you must, and I'm putting must, in capitals, must follow, and never deviate from, is to place a stop loss at the time you open a trade and do not cancel it. Don't ever open a trade and leave it without a stop loss. I know this is baby stuff, but I'm telling you, many people don't do it, and many people go to work and make money and come back to the market and invest 10, 20%, 50% of their salaries and lose it in a matter of days or trades. I don't want to talk negatively about things, but it just doesn't make sense. So let's open up PowerPoint. We spoke about this, we spoke about that, and let's go to overtrading. History repeats itself because of the weakness of human nature. Greed for a quick fortune has costed the public countless of millions and even billions of dollars. And every experienced trader knows that overtrading is his greatest weakness. I've lost many times in the past because I overtraded. I would sit on the computer and I would open trades after trades after trades. Even though I would make a lot of money in one day, I would probably lower those losses by 50, if not 60, if not 80, or if sometimes not going to negative, just because I decided to open that one more trade. That's why I say about the goals. You want to be a professional, you have to act, you have to think, and you have to work like a professional. You want to make money, you have to do what people who make money do. We make money in this industry, and we make it because we follow rules. We have goals, we have stop losses, we have risk management. And it's not hard to learn. We can learn it together, and we will. So, like I said, every experienced trader knows that overtrading is basically a very big weakness. And many experienced traders continue to allow this weakness to be their financial destruction. I've seen many people who are excellent at trading destroy themselves because they overtrade. And, overtrading without a stop loss is even worse. So, there must be a cure for this weakness in trading, and there is, and ironically, it is stop losses. The weakest point must be overcome, and the stop losses is the way to overcome it. If you find yourself trading too much, use automatic stop losses. Don't move them, don't touch them, because if you do, I promise you it's going to end bad for you, and you cannot blame anybody else apart from yourself, because you are in charge of your own trading. So you are the master. You're the painter who's painting a masterpiece, and it's up to you. It's your hands. It's your mind and it's your vision that creates this. So I'm going to point the second point here, and that is protecting your profits. By the way, we're going to be done with speaking pretty soon, and these sessions are going to change into something much more interesting, where we're going to be opening many trades. But I first have to bring you to the mindset that I have, and show you what I'm thinking about, and explain it to you in detail so you can understand what I mean and why am I doing these things. So it is just as important to protect your profits as it is to protect your capital. Once you have a profit on a trade, you should never ever let it run into a loss. And this is one of our rules from before. There are obviously exceptions to this rule, and the amount of profits should be determined where a stop loss should be placed. What I'm going to say now is probably the safest rule I can give you to use under average conditions. So when price of an asset has moved at about, and I'm talking about forex right now, so about 10 pips in your favor. For most forex majors, okay, not for gold, just forex majors. I'm talking about forex majors. You should place a stop loss where you will break even, okay? Make a few dollars or a few cents, something like that. So in very active markets, well, I actually advise using a trailing stop as well, but you will see many times price do this, and I'm going to show you my screen again. You will see many times price do something. Let's go on a shorter time scale. So you see, price has moved from here to here by 53 pips. Yeah? But from here to here, only 23. You understand? So if you had a trailing stop, you would have been in profit here, but you would have been out of the position over here, because your trailing stop would come up. So as soon as price would go back down, you would be out of your position. So what I recommend is moving first, doing this. Okay, now I'm 8.6 pips in profit. So this is what I would recommend you doing. You move this just about there. What do we do now? We've just eliminated all risk. That means that the only time we were at risk is basically this candle over here. This is the only time we were at risk. So we secured our basically, well, position. We secured our capital. And the more this goes up, our trailing stop is going to get activated because the shield is black. So when the shield is full, as you see it there, that means that there is something going on here. You can use advanced take profits, but I definitely recommend just using a trailing stop with no profits. Take profits. And at some point, you'll get happy with your positions, and you just press close all, and you're in. So, yeah. Okay, so in very active markets, I think it will pay you to wait about 15 to 20 pips before you move the stop loss order to about 10 pips in profit. And then you will have basically no loss should the market reverse. That's what I just did. You see, if the market reverses, I'm pretty much secure. I don't care. Okay, I lost on $51 profit, but I actually didn't lose anything, so I'm happy. I mean, this is the essence of trading. You know, yes, you can. You see you can move. John is asking if you can move the stop loss above the trade price. Yes, you can. See, I can move it as long as it's not above the price. You see, I can't move it above the price, but I can move it in profit. And as you see here, I'm 2.5 pips in profit with $14 in profit. So basically, I just secured myself, and I can go do this on gold as well. So this is a sell position. On just a second. You see, you don't want to do it on gold because gold works differently. This is like being 8 pips in profit. So unless we put it on a much smaller chart, and then we could move this in. But I wouldn't do it right now, so there's no point. Okay. Okay, so you see, now we secured both positions. That means that we're not going to be losing any money if anything were to happen. If price were to reverse, we are totally fine. We're going to make a few dollars, and most important is we're protecting our capital. You remember what I said in that session, I think the last one or the before last one, I said that if you don't open a trade, you can't make any money. But if you lose all of your money, you can't open a trade. So, I think that speaks for itself very well. So, like I said, by doing this, you will have reduced your risk to basically a minimum, and the possibility of your profits is unlimited. Okay? The more money you have, the more you can make, the longer you stay in the markets, the more experience you gain. It's just better for you. Because as an asset or a trade moves into your favor, continue to follow up with a stop loss or a trailing stop, as you're basically protecting your profits. This, what I just did by myself, is basically a manual trailing stop. But if I turn on my trailing stop, I believe in GBP. My trailing stop is going to start moving over here, and it's going to start going in profits. So yeah, that's protecting your profits. I'm pretty sure that if any of you use this, it's going to be very, very useful to you. And we're going to start having live trading sessions pretty soon on this. But I first need to get you guys well, like I said, on this level. But what I'd like to do is actually have Skype sessions, because I'd like to hear you guys talk as well when we're doing the live training sessions. But actually, I can unlock your mics here, so I think this is better than Skype. Okay, so when to enter a market. It is very important to know, and let me just turn this on so you can write. As you see, my gold position just closed out. Where is it? This one, sell. This one, you see, 22 pips in profit. So our trade closed out here, and yeah, see, we didn't lose. Okay, so protect your profits. Now we're going to when to enter the market. It is very important to know that when you buy or sell an asset, you must have some kind of rule or some sign as your indication for you to actually open this trade. There needs to be some kind of rule. Now, when you think that the market is reaching a top or a bottom, you will find on average, and I'm not speaking, I'm not just pulling these things out of somewhere, these are actual facts. You will find that on average, 7 times out of 10, you will be wrong. People will see the market and they'll say this is the bottom, this is a resistance, this is a support. 7 times out of 10, on average, people are wrong. It is not what the market does today or what you think it's going to do today that is important. It is more important to have an indication of what the market will do at a later date, when you actually expect to make profits. So it's not important what it's doing right now, it's for you to understand. Your job as a trader should be to predict the future, and you need to keep a track record of this. I fully recommend making an Excel file or getting a book, a pen and a paper, the good old-fashioned way, and writing down each trade, how many pips in profit, how many losses, as much as information as you can. Once you have about 100 trades, we can understand, by using the laws of average, we can understand what is your success ratio. And if any of you want to be mentored by me personally, then we would have to do this. I would do this for you, and you will do this for yourself. When the market reaches a low level or a high one, and you want to take a position, I would recommend that you wait until you have a clearer sign, a more concrete indication that the trend has turned up or down. So let's go back to this. I'm just going to open this trade because I want to show you how double tops work. So just a second. So if you're going to use a trailing stop, I must warn you, if you're going to use a trailing stop on gold, you can't put these parameters. You can't put this 15 and 10. You can't, because it's as you see, the spreads and everything is different on gold. 32 pips is like 3 pips. You understand? So you need to have better indications. Don't just rush into the market because you see a resistance or a support or something like this. Make sure that you have concrete points, stronger facts. Think about it a little bit. Say to yourself, if I take this trade, you know, and I'm wrong, how will that affect my my portfolio? The last thing you want to do is overtrade. So don't open positions just for the sake of being in the market. These are the rules that we set before. This, like I said, this is a very strong indication of a double top. There are very good chances that this pair will fly down. So we opened our trade. We're putting our stop loss. Take profit. We will not put. And yeah. So at times, you know, by doing this, what I'm saying is to wait rather than just act. You're gonna miss the bottom or the top by waiting. But what you're gonna do is you're gonna save yourself money, but not by not taking a trade until you have a reason to believe that you're going with the trend and not against it. One of the most important things that you should keep in mind is not how much profits or how much of a loss you're going to have. You should leave the money part out of the question, because that depends on the trade if you take it. Your objective should be to keep track of the market and keep being correct on the market. Okay, that is your objective. You have to forget about dollar signs and you have to think about percentages. That is more important, because if you follow these rules, and I promised you this the other day, if you follow these rules, every end of the year you're going to be green. You're going to be green, and you're going to have enough profits to, you know, to increase the quality of your life or somebody else's, to do many different things. Just don't rush. Take your time. Okay, so go with the trend. Study all the time to determine the correct trend. Before you're going into a trade, understand what is the market doing right now. I told you the other time the market can only do two things. One is go up and down, and the other is move sideways by going up and down. So understand in which mode the market is in. Every time the market is moving up and down, like here, this is a daily chart, so these are big moves. It's always preparing for a higher move, for a much stronger move. So, okay, delay dangers. Action and not delay makes money in the financial markets. There is no use of hoping, as that will basically not beat the market. Investors who gamble on hope go broke. You must stop hoping and start thinking. It's quite simple. After you think, unless you act at the proper time, good thinking is useless. Okay? So you can sit there and think all day long, but if you do not have if you do not act at the proper time, all of that thinking will go to waste. Knowing when to act and not doing it will not help you. Delays are always dangerous. You know, the longer you hope and delay taking action in the market, the worse judgment gets, and the surer you are to make mistakes. So stagnation is pretty much death and distraction in this industry, and action is life. Being right or wrong and not acting will never save you money or help you make it. So I just want you all to remember that delays are always dangerous. It is much better to take action now than to trust to an uncertain time. So you should never trade when sick or depressed. Your judgment is always bad when you're below normal physically. And one of the rules of a successful investor should be to keep good health, because really health is the true wealth. So I don't even want to go beyond this, but I said don't rush into things, but also don't wait a lifetime to do something. Make sure that there is a balance in between. Know when you need to act. Have a checklist of ABC. If ABC happen, and if C should always be the current state of the market, not something else, then you take a trade. Now, I'm going to teach you something that's very important, and it's called pyramiding. Does anybody know about pyramiding in the financial markets? Please tell me if somebody does or not. Even if you don't, just tell me no. No, 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 no. Okay, so I suppose not. No clue. It's okay. So pyramiding is something magical and has has made our investors in the private investment club a lot of money. And I'm going to show you. And I'm going to show you this very quickly. So the spread on don't do this without knowing it well. The spread on Euro GBP is where is Euro GBP? Euro GBP. Here we go. So my spread on this is 2.5. Yeah, and I have a profit of 5.6. You're not doing this with something so small. A normal and realistic target of opening something like this is okay, much more than 10 pips. So let's just, because we don't have a trade that's winning us more than 10 pips. Let's say that this trade is 16.2 pips in profit. What I would do is open another one in a buy position. Okay, so this one's losing 2.4, but this one is winning 16, let's say. What do you do with the 16? The 16 covers the the loss of this one. So even if both of them get stopped out, because our stop loss is in profit for this trade here, even if both of these trades get stopped out, we are still making a profit. Now, when you pyramid the correct way, for example, in movements like this, you can't know if it's a movement like this, but by having a profit of 15, 20 pips, for example, let's say here, if you were to open a trade here and secure about 15 pips, yes, it will be mailed. It will be made for sure. So if you have a profit of, thank you too, my friend. Thank you too, John. So if you have a profit of 10, 15 pips, or 20 even better, then you can pyramid yourself. Now, there are two ways of doing this. You're very welcome, John. Okay, so there are two ways of pyramid. One is to buy more, or obviously sell more, just that our market breaks into new territories or makes new highs. In a fast running market, you can continue to buy or sell every 15 to 20 pips, or even 30 pips, up or down. Now, when the market is moving in your favor, obviously all depending on the asset or the method you're pyramiding, of course, but this can generate really big returns. So if you like to generate quicker returns, you can pyramid yourself. You find specific entries in the market, and as soon as you have anywhere above 15-20 pips, then you can just open another trade in that direction. So I'm just trying to explain the logic in this. Let's say you're winning. I'm going to do this in dollar wise. Let's say you opened a lot on Euro USD, one lot. 20 pips would be $200 in profit. The next trade for the pyramid doesn't have to be one lot. It can be half a lot. Okay? So now we have a $200 profit on one trade, and on the other trade, we are losing about $10. Let's say 15 because of the spread. So we are negative $15. If you put the stop loss of the second trade, which is a 0.5 trade, half a lot trade, a stop loss at $50, okay, and that would be basically, that would be in pip value. It would be just about 10 pips. So let's say you put a stop loss of 10 pips on this trade. And the other trade that we already opened for one lot, and that trade is in profit, we said anything over 20 pips. So just 1 second. So this trade is in profit 28 pips. What you would do is and the market price, I'm just trying to explain this as best as I can. It's a bit hard when it's not. So this is market price, stop loss of 10 pips here, and your stop loss is here. You understand? So even if you lose both trades, you're still making, but you're increasing the value of your trades. So this way you're securing profits, and you're not really getting affected on the losses that much because your bigger trade is already in a profit. Your smaller trade is covered fully, even if it loses. Your profits are pretty much secured, but you're giving yourself a chance to make more money. So a pyramid should always be followed by a stop loss, no matter what method you use, because your capital and of course your profits must be protected. The more profit you have, the more room you can give the market to fluctuate. So the stronger your position is, the more you're in profit, the easier it is for you to pyramid more and more and more. Now, you obviously, again, you have to put stop losses, in some cases a little further away from the market price, so that the natural reactions of the market, which are normally about 20 to 50 pips, don't disturb your pyramid. Now, while you're pyramiding, you're securing profits of basically the first trade by opening a new one. If both trades were to close, one in profit and the other in a loss, you would still end up in a profit due to the difference. Now, when you are at free trades, you're securing the first two. So you never open more trades unless the other two are in profit. So when we open one, that first one is 20 pips in profit, we will open a second one. That second one becomes, let's say, 15 pips in profit. The first one is 35 pips in profit. You open a third one. But never, ever, 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 ever is that trade, the next one, stronger than the one before. So if the first one is one lot, no other trade can be stronger than one lot. So if you go down on the second one to 0.8 lots, the third trade cannot be stronger than 0.8 lots. So it has to be either 0.8 or 0.7. So if the third trade goes 0.5, you know the drill, can go more than 0.5. This simple tool can make you massive returns. And this is a big secret I'm giving out right now. I've used this in accounts to make... You lost me? You can't hear me? Okay, good. Okay, good. So what I'm saying right now, does it make sense? Okay. We need to have a session for this, so I can... So I'd be really happy to hold a session for everyone here, or even record a live one if you all can't attend the full session, for me to just show you what I do for a living. What I do for a living is pretty interesting. It can be impressive. It can be very boring sometimes, but you know, you always find somewhere to get occupied. So these little methods are... Good. Let's arrange it. Okay, I have on Thursday. I'm fully booked on Thursday because it's my son's first birthday as well, so I'm going to be busy with that little guy. But I'm going to be available tomorrow and Wednesday. So I believe we should do this. We should do this in both days, just in case we miss something in the market. I'll still record the sessions. And as soon as I'm done with this one, I'm going to send you all an email from my personal mail. Everyone that attended this session, they're going to get an email stating exactly when this would happen. But do you prefer, what hours does everyone prefer, so we can kind of, you know, get in touch easier? Does somebody have a specific time? I would prefer... Okay, I would prefer more active markets. We have 1 p.m. EST. That's in Eastern Standard Time, right? Okay, 1 p.m. EST. There's more people. Okay, good. Okay. Great. 1 p.m. EST. I'm just marking this down and I'm going to set this up for tomorrow. So, okay, great. Very good. Many people are liking that. So we're going to do it like that. And for everybody else who can't attend, we'll make a recording, and then I will have to do one in early mornings as well, just for everybody else in the world, from Australia, New Zealand, Japan, and everywhere else. But okay, so let's continue with this, and I'm just going to explain to you a bit more about pyramiding. Pyramiding, has anybody seen our accounts on MyFX book or any of the reports? Have any investment mentors sent you any of the accounts? Because there are accounts. Okay, not many people received this then. Okay, I'll send you this information. Many accounts have made, for example, we had an investor who invested in early January. I think it was the second week of January, and he chose a much more aggressive model. But it's because pyramiding that you see how much there is. Pretty much the risk becomes very little. The only risk we have is on that first trade. The rest is all a chance to win something higher. So with pyramiding, we created a return of 200 and something percent in a matter of 3-4 weeks. And this is a $10,000 account, so it's not like it was $100 account. It's big money we're talking about. The total profits were 36,000, I think, 26,000. 26,000, I think, so 200 something percent. But it is because of pyramiding that this was created. We obviously try to find trends, stronger movements in the market that allow us to open these kinds of positions. And, while we were doing this, we just kept securing profits from other trades. So in reality, the first trade, like I said, covers the second one. Even if the second trade is the same size, it just can't go higher. And this is not a form of martingale or something like this. You'll never hear anybody here teach you martingale or something like that. We're not gamblers here. We're professional investors. So, like I said, even if one of the trades loses, the first one is always in a profit. If you have 3 trades, 2 of them are in a profit, and they're always in a good profit, a good enough profit for you to make money. So in reality, when you come to 5 trades, if you manage to do that, wow, you're making money. That's really good money. As long as you're opening decent trades as well, that are probably about 5% of your total balance. With 5 trades, you could easily make 50-60% return, maybe more, depending how much you're getting. So, this way you're not losing your capital, but even if that one trade loses, you're not losing anything of your capital, but only of your profits. And I'd rather lose some profits than lose my capital. And I'm sure you all agree with me on this. Michael, I will send you an email. Can you shoot me your email address in this, and then I'll shoot you an email, and then we can meet on Skype, and I'll explain to you a little bit better of how to do all of this. Okay, you can send. Okay, I just shot my email to everyone there, so if somebody needs me at any time, yes, I've sent my email address there, and I'll send everyone else. I'm just gonna write this down quickly. So just a second, guys and girls. So Dinesh, can you please give me your email address? Okay, so I'm continuing. I received the email addresses. No, we don't. Okay, I'll send. Writing everything down. So Peter is asking, do we not pyramid every trade? No, and I'm going to explain why very quickly. Markets move in channels sometimes. They don't always move in rapid movements in areas. If you can see this little channel that I drew over here, I'll just remove these other lines out of here, and you can see. So I want you to pay attention to this over here. So please pay attention to this. The red lines, you see, and this here started after this move over here, so let's pretty much start it around here. That is the 9th of December. This is last year. You see, these are daily, these are 4-hour charts, and it lasted all the way till here. So this is almost 2 months, as you see, from the 9th of December till the 3rd of February. So this is almost 2 months of movement. You can't catch much in it. You see, these are moves. Okay, well, they're 200 pip moves, so you could catch plenty of trades in here. But here comes the but. This is designed, just the market is designed not to let you do things like this much. So you see, this would cancel all of our trades, and we would be, we would have our profits. That's it. So I just want to show it to you. I can't still show it to you on gold because gold is only 93 pips in profit, so I can't show you directly. But if this comes into just a bigger profit, I will show you how it works live, and I really hope this goes. Okay, Michael. Okay, we will talk later on then. Michael has to go pick up his son from school. So I'm just writing. Just 1 second, Katerina. I'm writing your email now. And I've got the last one here. Okay. Oh, we got one more. I got you, Lisa. I'm writing it in. I'm just writing them right now. I have this habit of doing. Bye, Michael. Bye, Michael. Good to have you here with us. I have this habit of writing things and doing things right away because I have another habit that if I don't do it right away, I probably won't. I probably won't do it. So, and I'm pretty sure other people can refer to that as well. So yeah, pyramiding is something that not many people are going to talk to you about. This technique was used, and not many people use this. Not many people use this whatsoever. Just 1 second. Thank you, Sergey. I'm going to teach you this as well. So, not many people use this. I got you, Kato. I received you too. I'm putting you in there. Okay, you're saved. Oh, we got Johnny as well. I got you. Typing you and Johnny as well. You're welcome, Kato. Thank you, Johnny. Thank you. It is a pleasure that you're all interested in what I have to speak about here and show you. And I promise you, if we all stick together and if we all support each other, this is what I call a mastermind group. This is something that I don't call this. This is what Napoleon Hill calls it, and this is one of the greatest books that I've ever read in my life. And that really opened up my mind, but we'll speak about this another time. Here we go. I'm going to do it now. You guys can see my screen. I'm going to open another lot for sell. We have 125 in profit. Obviously, this is not the ideal way to do it because gold is not fun to do this on. So, you see, if we close this trade, and if I lock it in, it's too small. It's too small. Yeah, you see the difference is too small, so we won't be making much. You see, we're going to make like $30 profit if it doesn't go in our direction. If it does go in our direction, we can do it like this, you see. So you see, you can put pending orders in there for this if you become better at this. But normally on gold we would look for something for a stronger. You see, we need to do it another pair. Gold is not good for this because gold is too tight, spread wise, and it fluctuates too quickly downwards. So I'll just remove all of this and I'll leave the rest in. and hopefully it moves. Anyhow, let's continue. And we'll just monitor this. If it keeps going down, I'll open another one and I'll show you how to do it. This way, this has really secured a lot of profits for us, and we were able to turn accounts of, well, we provided returns that are sometimes extremely hard to do. But with a simple method like this, it can really work, and I'm sure it kicks in your logic as well, and you guys understand what I'm doing here. But it doesn't work always, but it does work as soon as you open the second trade. I mean, the only reason you're opening it because you have a substantial amount of profit to cover the loss of the second trade and make your profit. Otherwise, we wouldn't be doing it. So this is called pyramiding. Like I said, this way you're not losing any capital, but only a part of your profits. While in the early stages of this pyramid, your stop loss should be closer to the opening price to protect basically your original capital. So you don't want it too wide. If you don't understand what I'm saying, we'll create a private session, and I'm gonna do this properly with everyone in private sessions. I would prefer doing private sessions because then we can talk and get to know each other, which is very, very important to me. I like to get to know everyone that I do business with, especially on a personal level. I like to understand a bit more about you, and I'm sure you guys would like to know a bit more about me. If you don't, it's still okay. So, how much profit should you expect? It's written there. How much profit should you expect? Most traders expect... Oh, just a second. I just have a quick question. Thank you. Okay, so most traders expect too large profits from the business of speculation. They do not stop to figure out what a gain of 25% a year means over a period of 10 or 20 years. And I'm speaking about 25%, which 25% is not much. It's quite small. Let's say I started with $1,000 and I have a minimum gain of 25% a year of trading. So that's $250. It's not much. And I do this for 10 years. In 10 years, that 1,000 becomes 9,313 and 25 cents. But if I increase my investment to 10,000, at the rate of 25% per year, it turns into 93,000. You understand? I know it doesn't sound like much, but 25% is very easy to achieve. So, $1,000 with a 100% ROI a year becomes $100,000 at the end of the decade. I'm pretty sure we could all use $1,000 for something. But if we combine it with the law of compounding, well, now that's a whole different ballgame there. Because if you use compounding to your advantage, and I've used this in a seminar before, and I've used it for trading as well, especially when somebody has a very big goal. For example, we work with many people who have big debts to pay off and things like this. So they come and they invest some money with us. We create an investment plan with them, and that investment plan literally dictates exactly what we're going to do throughout the period of XYZ days, weeks, months, or maybe years. We have people coming to us that they want to buy new houses, so they invest some money, and obviously we try to achieve that. We've been successful so far, but I'm going to just go back to what I was saying about the 25% a year. You saw 10,000 turn into 93,000. You can also see, 20,000 turn into 200 something thousand, or 10,000 turn into a million. It's possible with the correct approach. So it's pretty easy to accumulate a fortune in a reasonable length of time if the trader is smart about it. Now, if you're conservative and you do not expect too much, you can achieve that goal every single time, because 25% a year is very easy to do. 50% a year is still decent. It's not that hard to do. 100% a year is a challenge to some people. To some people, it's a piece of cake. But yeah, so many traders come to the financial markets with the idea that they can double their money in a week or a month, and many of them try to do that. They have no rules. And by the way they trade, it cannot be, it cannot be done. I've seen people come to our company here and tell us, we're going to turn this 1,000, 10,000 into this and this and this. And I've asked them how you're going to do it, and they say with my trading system. And everybody thinks it's a trading system that helps you achieve success, but it's not a trading system. I don't use a trading system, and look at us winning money. You see, there is no trading system here. You don't see me using an indicator. I just use my eyes. So we have 2 trades in profit now, okay? We have 211 pips and 46 pips, right? So our stop loss is here. Unfortunately, this reversed. So I can't do it now, but 46 pips is, just a second. The spread is 26 pips and we're 46 pips. You see, so we only have 20. No, we can't do it yet. But you understand what I mean. As soon as this trade would go a bit high, more into profits, we could move this even lower and open a second one. But we will not open a trade until we do not move this back, okay? So we do not open a trade and then move everything. We move our stop losses and take profits. Our stop losses, and only once they are moved do we open another trade. So in this case scenario, we will secure, let's secure 36 pips, and here we're securing $100 and something, and then we're opening half a lot. Okay? So our half a lot stop loss is here. And if all of these trades hit into the stop loss, we're going to be making some decent money. Okay, so we're going to be making on this one here $200, on this one here $77, and on this one here we're going to be losing. Well, we're going to be losing. Where's the stop loss? We're going to be losing $23. But pretty soon this will come into a profit. Like I told you guys, this is double tops are pretty strong. I just didn't want anyone to take it with me yet. There is still time to take it, but don't yet. 1 more hour and this candle will close. Oh, we have a question. Yep, we see it working. So we have the third trade that's in profit now. If we wait just a little bit longer, there's a very good chance that this will head to this area here. Okay. And I just want to show you something very quickly. So the prediction was pretty clear last time out. We said it would go up this way, and now I'm telling you it's going to go down. Obviously, we're not right all the time, but we're right most of the time, so that's what's most important. So I just want to do something very quickly, and I want to show you what I've been doing with you guys before. And this is this. And now I'll let everybody head out. So I've added some more levels today to make this quicker and easier. So I've added till 200%, and I just keep adding on 12.5% to all of these. How many trades on one asset would be your highest amount of trades? Peter is asking how many trades on one asset would be your highest amount of trades. Okay, so it is very, very, very important to have. There's a mosquito in my room. Just hold on a second, guys. I don't want this little guy to bite me. No, he's gone. Okay, so the amount of trades. The amount of trades depend on the capital and the margin. In this case, this account has $10,000. We're opening 1 lot trades, and now we went down to 0.5. It all depends on the margin. The last thing we want to do is get margin called, but we actually can't get margin called if we're in profit, so we're fine. The maximum amount of trades, I don't really have a maximum. I wouldn't go too wild, but if there is a trend, I'm going to try and maximize my profits on it. So I think on gold, every 50 to 60 pips, we could, this is a minimum, probably every 80 pips we should add on a trade. But I just wanted to show everyone how this works. So yeah. Peter, to answer your question, I wouldn't have really a minimum. I just don't want to affect my margin and then not be able to open other trades on other pairs where we could have better opportunities to, to make some money. So what I would advise is not uh, okay. I hope it helps. I'm trying. I'll explain it to you in a personal session as well, Peter. I'd love to get to know you better and explain everything to you fully, exactly how it's in my mind. So I'm just showing you guys this. You see, I've added my levels on a weekly chart, but I'm also adding them here on a 4-hour chart. And I just want to show you this. I'm just going to use the 150 and 50% level. And I want to show you how this is going to work. So I'm going to add it here, and I'm going to add it here. Just a sec. So as you see, this worked. This worked really well last time. Price came here to the 50% level and dropped. This time it's past it. You see, it did pass the 50% level, but it's already fading out. It's giving shadows on top, and it looks like it's going to start heading downwards where it was. So I just want to show you this work even more on other areas of the market. It's not necessarily, these are just points of interest. As you see here, price came close to it. Here it just went right past it, but there was a small correction of 700 pips upwards. So these are just points of interest. They can work really well. You see, these are areas of interest. These are not points where we buy and sell. They're just areas of interest. So you can see it work here as well. It's I need to teach you all this much better. So the spread on this is, what did we say, it's 36 pips. So soon we can take another trade. And you see our profits are just going to keep increasing the more price goes into one direction. I just don't want to waste the whole night because I actually have quite a few more things to talk about. So how much profits to expect? Many traders basically expect to make millions and so forth, and they've got these crazy goals, and but these goals are never definite. So you can really make a lot of money in this industry. There is no limit on how much you can make, but there is a limit on how much luck you're going to have. So I think that you need to have definite aims. You need to trade with a purpose. You don't need to trade and say, I want to trade because I want to stop working. That's not a definite goal. A definite goal is, I want to trade so I can, so I can support my family better. And it has to be something that really makes you tick. If you can't wake up in the morning feeling great about it, or if you can't be dedicated enough to, but you all are. You see, you're coming to these seminars, and all of you are always here, and that's something rare. You don't see this a lot. We have many clients and traders come by here, and they all think that they know exactly what they're doing. And I'm not telling you that I know exactly what I'm doing, but the reason I know a lot is because I study a lot. I failed a lot. I practiced a lot, and I'm very dedicated. And best of all, out of all of these things, what I used to think was my biggest weakness is actually my biggest asset in this industry. I have this thing that I like to help people a lot. So before I thought of that as a weakness, but when I started my own brokerage, I looked at this as the biggest asset because I provide things here that other brokers couldn't, even if they paid me to do it, So, yeah. Okay, so this should be one of your rules. Never buy or sell to gain a few pips of profit. And what I'm saying about this is try not to scalp too much. Unless you use very small or abnormal stop losses of similar points. I mean, if you're trading to make I said this in the beginning, but if you're trading to make a 5 pip, if you're trading to make a 5 pip profit, your stop loss should be like 2-3 pips, but you can't do that because of the spread. So it does not pay on average to risk for such a small profit. In the long run, all you're going to do is burn your capital out, and you're going to be down 20 or even 50% in a matter of weeks, if not days. So my logic does not let me risk 5 pips to gain 5 pips. I just can't. I could never do that. Try to stick to trades where you have opportunities, or at least where there is a promise of a greater profit more profits than losses. There is no use of getting into the market when you think that there is only chances of making a few pips. I mean, that's suicide. Why would you go inside the market where, like binary options, for example? I just gotta say this. I saw a gentleman put that he has a binary options account. I'm going to explain to you it like this. Why would I know that even if you're 1 pip in profit, you're still making the 85 or 82% return or whatever they're offering, but it doesn't make much sense that you're risking, for example, $100 on a trade in order to make a maximum of less than $100. It doesn't make much sense. We'll talk about this another time, and I'll explain to you exactly how this industry works and which brokers are real and what is real, basically, what uses the real market and what uses price streams from Bloomberg and Reuters and other scammy providers for these things. So basically try to stick where you have more opportunities to make money. Just a second. So look, there is no use of getting into the market when you think that there is, that you're going to make 5, 6 pips, 10 pips, because look, you can be wrong and lose more than you expected to gain, and that is insane. Don't do that. This is better. It is much better to wait until an asset crosses a resistance level one way or the other and get in where the opportunities are for greater profits and longer swings. You need to remember that you need to make success. Your profits must always be greater than your losses. If you really want to achieve success, this is the first rule. Your profits must be greater than your losses. And your rule must be to cut losses short and let profits run. So this is the essence. Profits need to be taken and losses need to be cut out. Okay, so oh, Euro GBP. I'm breaking my own rules, you see. Thanks for that, Peter. You helped me out. See, we all break our own rules. Okay, so I'm gonna just do this one more time on since we have 75 pips here. So you see, this is what I don't like about gold, because you have to go on these lousy one minute charts. Just a second. Okay, so now what we do is again I've broken another rule, and I've actually opened the trade before, but this is for the sake of actually showing you. Can you all, 1 second? You're welcome, Craig. You're welcome. You're very, very welcome. And I'm actually going to call this day after this one. There's more things that I want to talk to you about, but it's getting late for everyone, and I'm sure you all have things to do. So okay, now we're moving the stop loss of the 0.50 into 48 pips of profit. We're moving this down. This is 300 here, and we're moving this down. There's another 100 here. We're putting this over here, and now we have 3 trades that have secured profits. We have $500 here. Forget about this trade here. But if we go one more trade down, we'll just keep doing this, and we're going to keep doing this. Okay, I'm going to add you right now. Timon, I'm adding you right now. And by the way, guys, I This is Dennis. This is not Stefan. I know many people say we have a very similar voice, but it's not Stefan. It's Dennis. Okay. Yes, it is. You see, we just keep securing profits. Even this is in profit here, but I wish I could show it to you on something else. But I'm really glad I got to show this to you today. This is pyramiding, and I invite any of you to add me on Skype. You can use these two different email addresses. And I'll send this to everyone. You're welcome, Timon. You're very welcome. I know many people make the mistake that everybody thinks that that it's Stefan, but it's not. It's Dennis. Okay, I'm back. It's this boosters. I'm gonna sort it out tomorrow. Can you all hear me? Okay, good. So so just a second. Let me just show you this because we're gaining even more. We're gaining even more profits over here now. You see this double top is working really nicely today, and shamefully I'm doing this on a demo account, but whatever, it's okay. So like we said, we move, and eventually you will get stopped out, and you'll still be happy because you're gonna make a lot of money. See, I'm almost making 10% in this trade, just on this. Because you see the account started with 10,000. Forget about the wins and the losses, and even forget about this Euro GBP trade here. Let's say we started at 10,000, you're making 8% already. And worst case scenario, I'm pretty sure we're stuck at about 7%, which is great, which is amazing. Oh, okay. We need to change that, Lisa. So Lisa says that you all think that it's Stefan because it says Stefan's talking, and I actually see this. It's here on my screen. It says Stefan Duncan's talking. Yeah, you're right. Okay. Yeah, I'm gonna send everybody this recording. Actually, there was much more that I wanted to talk about, but there is not enough time. I mean, I'm pretty sure you're all tired and you've got your own things to do and your own days to run. But please all send me an email with any kind of feedback that you might have, with any questions that you might have, anything that you need. Just get in touch with me. You have my email address. I receive that emails on my phone directly. You can add me on Skype. On both of those Skypes, that the addresses that I've just sent you there, I am on both. So you guys can just get in touch with me whenever you like. So you see, all of our trades just switched off. You see that? Everything just closed. And if we just choose the gold trades, we have only one loss of $25, and we have all of these profits. You see that? And I hope you guys enjoyed this. Thank you, Peter. Thank you. It's brilliant because of you guys, because of you girls and guys that are here. But this double top is going to work great. I'm not going to open any more positions. We left this one there. So yeah, I really hope that this has helped you. Please, boys and girls, don't do this without me. Okay? Do not open this without me. Get in touch with me, and I'm going to explain to you exactly how to do all of these things. Thank you, Lisa. Thank you, Jean. Thank you, Peter. Thank you, everyone. Well, please, at least, send me an email, and I'm going to explain to you guys in a personal session. I'll take half an hour out of my day and explain to you exactly how to do this, and we can even open trades together. As you see, I'm pretty good at this. I mean, the whole time we were sitting here, I did open I open these trades and we have that one loss, and if this closes out, that's two losses. So I mean, these are good odds. Hey, thanks everyone. Thank you very much, and just please get in touch with me for whatever you need. The webinar is recorded, like I said, and I'm going to be sending all of this information to everyone later on. But you see, we stopped at pyramiding, but there was much more to talk about. So I'm going to send everything to you tomorrow. I'm going to upload this to YouTube and send it to you. I wish you all. Thank you, Johnny. Thank you for your time. I wish you all a great time. And tomorrow, 1 p.m. Eastern Standard Time, we're going to do a live training session. You'll all receive an email with this. I have all of your email addresses. You've sent them in this, but now I remember that you've also, when you register, you put your email address. So I have your email addresses there, and I'll shoot you all an email. And yeah, let's get connected. Let's get to know each other, and let's help each other grow. So I wish everybody a very good night, and I really hope you enjoyed today, and I'll talk to you pretty soon again. Okay, bye-bye everyone, and cheers. Take care. I'm shutting down the webinar now.